All right, hello traders. It is Wednesday, July 24th, 2024. Apologize for a little bit of the bad grainy video quality, but I am on vacation. This is actually my actual background behind me. So this is a view out over my deck here. So you can see a little bit of the Atlantic Ocean, a little bit of wind today, some waves, but there was a lot more waves and wind in the markets today. So let's get into talking about what happened in the markets today, how we were positioned, where things are, and hopefully calm everybody down because everybody was flipping out today with the market down a whole 2% or so. And if you think today's tough, okay, imagine what could happen if you get a couple more of these days if you're not prepared. So speaking of prepared, let's talk a little bit about where we were overall. So a couple things to take a look at. Hey, I did tell you, and I'm sharing my screen. Let me get off video here for a moment or so it's not distracting. But if you look down here and you look at the videos that we released back here 12 days ago, on this video, I said, are you ready? Sell-off warning signs. Okay, how's your plan? The sell-off is coming. So 12 days ago, I told you there was a sell-off coming. Okay, so 12 days ago, we knew we were going to get some selling. Okay, I did prepare you. So if you watch the videos, okay, I'm giving you as much help as I possibly can. All right, so there you go. Sell-off was coming 12 days ago. Right? I told you we were going to get some selling, and of course, we did get some selling. All right, so if we look back really to that particular day, you could see the market starting to sell off here. Was important to note what was going to happen. So anyway, let's take a quick look. And again, that's water under the bridge for the most part. Okay, but it doesn't mean you still can't improve your plan and your trading. So let's get into it here. But identifying some warning signs is the first key. So you can see here on the weekly chart, right, and we're going to use some TradingView charts today. Weekly chart, we're up, tipping over last week. You had all of last week to figure this out. Okay, so you had Wednesday, Thursday, and Friday of last week to see that we broke this inverted hammer here to the downside. Okay, so you had ample opportunity. We also had more opportunities yesterday to protect ourselves and the day before to protect ourselves. So Monday and Tuesday of this week were also days that if you weren't hedged or you weren't ready, now I'm not saying the market's going to zero and this is the giant correction of all corrections. It might just be a couple of days of down. Okay, but a pretty good down day today, enough to scare the pants off of some inexperienced traders. Okay, and I want to give you a little comfort in understanding what we do. And, you know, it's all good. We're going to get this, you know, we're going to make money, and we are making money. So let's talk about what we did today. So anyway, down 2 weeks, we're at the trend line on the weekly on the S&P. All right, and then we did break the 21 EMA today, and then we also went right to the 50, broke it fractionally, but we're right at the 50. Decent volume day, not the biggest volume day that we've had. Okay, we had a bigger volume day last week. Okay, but decent volume today. MACD falling, RSI is falling, squeeze is falling. Hey, we've been overbought for a long time in here, for weeks and weeks and weeks and weeks. So you should have been preparing yourself that we're overbought. Yes, we can stay overbought, but maybe a little caution is warranted because eventually you get a little bit of a downdraft like we had last time. Okay, well, we rebounded pretty nicely, new highs, and a 2-week downdraft. Okay, we may have 3-4 weeks of it. We'll see what happens. I'm still struggling with my voice, so I apologize. All right, but this 50 is important, that if we break the 50 and we continue to drop, I think it's something that we have to keep an eye on here, that if we're going to break this 50, okay, we got to keep an eye on things. If we break the 21 on the weekly, I'll be more concerned that, okay, now we have some levels. But I really like this level in here. If we took a line from here and we drew it across, okay, that line would correspond pretty close to 53.30 or so. So that's where that line is down here about. So we have maybe 150 more points to go till we get to this line, which happens to be a little bit of a pivot level. Okay, it's been a pivot resistance level. We came up to it, resistance again for several days till we finally broke it, tested it, and off we went. So this is a good line in the sand, in my opinion, is this 53.30. It's also where the 21 EMA is on the weekly. So that's what I'm watching. Okay. I'm more concerned with the weekly, not the daily charts. So there's ES. Let's take a quick look at oil. Okay. Oil, one of the bright spots today. Oil's been in a pretty good selling mood, okay, for 3 weeks now, as we've got, lower low, lower high, lower low, lower high, lower low, and then a little bit of a rebound today. So I like where we are on oil. Still everything negative, okay, but I think this is a good spot on oil, and really think it sets up well for some 112 and some strangle trades. I think there's opportunities on oil. If we're taking a look at gold, gold also performed well today, and we're heavy in gold and heavy in oil. So gold, we've got this nice ascending triangle that we're fighting with here, and nice updates, the last 2 updates, big sell-off, here at the end of last week, but Monday, Tuesday, Wednesday of this week we've held the 21 and we've bounced off of it. We started to see, everything kind of flattening out here, even a little rise in the RSI. Overall, I think gold still a good setup for 111, 112s, long plays. And if we break this level here right around, I don't know, 45.50, or I'm sorry, 25.50 or 24.50, I'm sorry. If we break that, I think we could see gold taking off. And then let's take a quick look at bonds today. Bonds dropped decently on the session, coming down all the way and just sitting pretty squarely here, right on the 21 EMAs as well. So, or the 200-day EMA. So we had the SMA here, the 200. So sitting right on that thing. And then we're right smack on this anchored VWAP in here. So let's see if we can maybe pull this up and give you a little bit better look. This anchored VWAP goes way back on the weekly chart. Okay, see if I can bring it up to this particular low back here. This anchored VWAP has really kind of held up in there, and we slammed on it today. And that was much where bonds held up. Is that the best play? I don't know that it is, but I think it's one to potentially watch. Okay, if we move the anchored VWAP to this low back here, which was a good buying opportunity, all right, we're just a little bit above it. So I think this whole 117 level is pretty good for bonds. I like where bonds are, and I think bonds do set themselves up decently for strangles still. So I'm going to keep playing bonds. So oil, decent day. Gold, decent day. Bonds, down, but I think a decent setup here. So lots of opportunities out there if you're in the futures market. Overall, too, if we take a look at the U.S. dollar, that thing's just been struggling now, sideways, doing not a whole lot of anything for the last 2 weeks. And then VIX, the big, really the big key today was volatility rising. Pretty good day up on VIX, 22% increase on VIX. And if we take a look at the VVIX, and just to get a sense of where things are, if we really tighten this up. Okay. Now, we've been up to this area before. We'll see if we continue, but nice rise in the VVIX as well. So this looks, like volatility's up, but again, today saw a little bit of a drop in the VVIX as well. But VIX was up today, so volatility's up. As premium sellers, you combine volatility with a drop in the market of 2%, and you're going to have a bit of a red day. So how do we end up on the day today? 1196 is our delta. So our delta is now about 0.23%. It's about the maximum I like to see it. However, on this type of a sell-off, I'm not too worried about delta. but I would like to potentially bring that down. So we'll be looking potentially at some ways, if the market falls further, to get some negative delta into the portfolio. Now, if we're looking at theta, up slightly today, 1557. So theta numbers remain pretty good, considering VIX is still at only 18. 1557 is pretty good. Now, we did have a drop in net lick today to 511. So pretty good, excuse me, drop in net lick on the session. BP usage popped up a bit here, but we're only sitting at about 62%. So we're really not in any kind of trouble area. And we did book another $375 to the good today. So not stopped out, not closing any trades. Our focus is not really on our net lick. Our focus is always on our realized gains and losses. Because if you focus on the individual trades and you realize gains and losses, and if you are really doing well by consistently closing your trades, making money, and booking gains on a consistent basis, the net lick's going to take care of itself. So the whole net lick thing today is, yeah, it's down, but we didn't close it. We didn't take a loss on anything. All of our trades are still open. In fact, we closed the trade for 375. And what was that today? Well, this morning we entered a 0 DTE call spread. 50 cents is what we opened it for. We did 15 contracts, closed it for a 50% winner in a short period of time today, and we booked $375. So taking a look at the overall month, okay, we're still up $28,000 for the month. Now, we have a whole week to go, so we'll see what happens in the account. But $28,000 is what we're up. We have not taken any losses. And it's not like I'm not booking a loss if I don't have it. I just don't have any losses to book right now. There's nothing that's really being seriously threatened that we have to watch out for. All right, so $288. That puts us up 28.7% this year. The market is now up 14% for the year. So we have now doubled the market. Okay. Our goal is 3% a month. That would be 36%. We are close to our entire goal. Okay, and it's only the middle of July, with a little bit of a sell-off. The market's only 3.5% off of its all-time high, which happened 3 days ago, or a week ago. So just relax, folks. Okay, we're 3.5% down from an all-time high. Okay, that's nothing. Okay, if we get 10, 12, 15% down, all right, then we'll worry about where things are. Overall, we're still in good shape. 112s are up $10,000 this month. Strangles up almost 5,000. Other 112 trades up about 4,100. XL 112s generating about 1,600 so far. 0 DTE positive at 745. We have closed some 120-day naked puts for about $6,000 this month. Bill is paying off some spec trades. So overall, we're in pretty good shape. In fact, this number, we have to double check that number here since we're looking at 28 overall. But we'll see where we are. But we are right now, the best month we've had of the year was $22,659, and we're sitting at almost $29,000 today. So we'll keep an eye on where things are. If we're looking, we should be at 29,345. So I'll have to keep an eye on why 29,345. Maybe something's not being picked up somewhere in the market, but we'll double check it and make sure everything is in good shape. But that's the only thing we've closed today, and we have not closed anything else this week. So the 19th was the last day we actually closed any trades in the account. So we haven't closed anything for about a week, and finally a 0 DTE today. So all in all, good shape, like where we are. All right, so setting new highs. So let's talk a little bit about just what we're seeing. So we touched base on the markets. Overall, we touched base on some of the charts, touched base on our account, which is doing fine. In fact, we booked some gains today. Okay. But just to keep things in perspective for you, and I'll get back on video and we'll wrap it up. for everybody today. And again, apologize for this grainy video. Hopefully the sound is at least good for you. All right, but overall, okay, we want these kind of pullbacks. These are healthy pullbacks for the market. If you want and expect the market to go up, you're going to get pullbacks. Now, you got a double whammy today because the market went down 2% and VIX jumped up 22%. Both of those things are going to hit you. However, we've been telling you for 12 days now, start to prepare. Get your hedges on. I actually have a few more hedges than I normally do. I actually have 3 hedges running. I've also been adding XL112 trades with very wide put debit spreads. Okay, so I've been adding those over the last several months, 4 or 5 months now. I have been adding more and more of those so that I have more put debit spreads on. All right, so I think it's important that you see some of these signs getting toppy. We're overbought. It means just chill out a bit. But the most important thing that you can do is keep your buying power in check. This is why we keep it at like a 50% buying power. You keep your buying power at 50%, excuse me, you're going to, when volatility rises, even though your buying power is going to go up a bit, it's not a problem for you. But because it was at 50% or higher, I stopped buying or adding new trades. When you control yourself and you're not having to actively trade and put something new on every day, and you're disciplined and stick to your plan, you're going to be much more prepared anytime the market goes down. So overall, we only have 2 of our long-term 112 trades that are actually red on the naked puts. They're only down about 50, 55%, something like that. So no problems there, at least down at this point in time, with a pretty big spike in the VIX today. Okay, and we held in there, I think, pretty well on all of our trades. And we've got winners, getting ready to close in oil, in gold. We are setting ourselves up for the best month that we've had. I'm not worried about P&L. I'm only worried about realized gains and losses, managing each individual trade. What am I hedging? I'm hedging those ES naked puts. That's the only thing I'm hedging are those ES naked puts. People are asking me, well, when would you take your hedges off? Do you take them off early? When do you take off hedges? The hedge is insurance against me losing multiple long-term 112 naked puts. Okay, short ES naked puts. That's what my hedges are for. It's not that the market goes down 3% in a week, which is what we've done. Okay, I'm looking for if the market goes down 12, 13, 14%, and now I'm starting to stop out on multiple trades, then I hope those hedges are going to offset it. Let's say we go down another 2% tomorrow and another 2% Friday. We probably still won't be stopped out of anything. P&L won't look great, but we won't be stopped out. Okay, we're going to have to continue on that path, 2% a day for days and days and days without stopping. Okay, and the VIX is going to have to keep increasing for us to take a loss. If we take a loss, we're going to stop out on 1. We've maxed our sizes out so that a 2x loss is only 2% of our net lick. All good. All right. So this is why we trade. This is why we hedge. This is why we trade long term. We're not doing short term. We're not scalping. We're not doing covered strangles, within 7 days. We're not buying and scalping naked puts. Okay. We're not trading the NASDAQ. That'd be insane. Okay. Right now, the NASDAQ and those big cap techs, that looked the worst. Okay. We definitely stayed away from that thing. So we don't have any trades on in the NASDAQ. We just had one expire a week ago. Nothing new to put on. That thing is way overbought. Okay. You're in earnings season. If you remember last time too, NVIDIA came out with some pretty good earnings, saved a lot of the market. So today we're down. Tesla, not too good on earnings. Google taking a hit, even though the earnings weren't too bad. Maybe some of the big cap techs aren't going to beat earnings as badly as we expected them to. And because of that, market's going to sell out. You've got to crush your earnings. Otherwise, you're going to get crushed as well, which is why we stay away from most of the stocks out there, at least in the Income Navigator service. There's no stocks in any of my portfolios at all. All right. So bottom line here is stay calm, folks. Look at the ocean behind me. Okay. Enjoy the fact that, okay, there's nothing you have to do. If you were prepared and if you're sized appropriately and you focus on only your P&L on a realized gain and loss basis. Each individual trade, don't look at your P&L, stay away from it. It's not going to help you. Okay. My buying power is under control. My P&L is fine. I don't have any trades approaching a stop loss at all. We're not even close. We're, 3X's away from that. So we're only down maybe 50%. We're not even down 100% in any of these things. And we don't even stop until we're at 200% down. So we have a long way to go for us to even take a loss. And if we take a loss, we take a loss. Okay. We've also got hedges on in case something else goes awry. Okay. I like where we are. Stay safe out there, everybody. Enjoy the rest of your evening and stop looking at your P&L. Go enjoy your family. Bye-bye.